Out of 412 Melbourne suburbs, only 24 have vacancy rates below 1%. Let me show you what that means.
Welcome back, everybody, to another episode of Prop Spotter. Prop Spotter, where we make property hunting easy. Today, I want to talk about Melbourne. It's probably the most talked about city of 2025. It got no airtime in 2024. Many buyers agents, many investors, anybody in the property market has certainly spent a fair bit of time looking at Melbourne this year. What does Melbourne have going for it? Let's cover the positives. Firstly, it's got a very, very huge population. We're talking a population that exceeds 5 million people, is set to overtake Sydney in the next couple of years, and is set to become the biggest city. Correspondingly, it's also a capital city with the most land area. There is still plenty of vacant land in and around Melbourne, but as the cost of building has slowly crept up, so have house prices. And this year saw many investors flock to Melbourne simply because it is undervalued. Now, you might ask, Sean, what do you mean by undervalued? Well, let me break that down. Currently in Sydney, to buy a house 50 kilometers away from the CBD, you're paying about $1 million. What we're talking about here for comparison is a standalone house on 500 or more square meters of land built in the 1960s or 70s, and we're talking about suburbs in 2770. Craigieburn, Wilmot, Emerton, Mount Druitt. Now that's Sydney. Correspondingly, in Melbourne, what's your comparison? Your equivalent comparisons in Melbourne are Frankston North to the east, and to the west, Werribee and Wyndham Vale. Now, what are you getting there? Again, a lot of these suburbs are not 40 kilometers away. They're about 25 to 35 kilometers away from the CBD. And in those suburbs, you can get a standalone house, for example, in Frankston North for $750,000 that sits on more than 500 square meters of land. On the west, you get even more value, where in suburbs like Wyndham Vale, you can find a standalone house on $600,000 or less, with more than 500 square meters of land, and still be in commuting distance of the Melbourne CBD. Based on this and a few other triggers, a lot of investors flocked to Melbourne this year, myself included, but I went last year. Now, is Melbourne still a good place to invest in? Possibly, but it is markets within markets. And today, what I wanted to talk about was a trend that came across my desk over the last couple of weeks that has been brooding on my mind, and that is Melbourne's vacancy rate. In some of these investor hotspots, the vacancy rate has slowly crept up over time, and we're now looking at rentals sitting on market for months before they get tenanted out, and investors not willing to drop rents because they're expecting a certain amount of yield to come through on their properties. That's all well and good if you've got the borrowing power and the serviceability and the capacity and the cash flow to be able to hold those properties. But if you can't, you're in for a little bit of a struggle, ladies and gentlemen. And let's talk about it right now in depth. Right? Of the roughly 412 suburbs in the Melbourne GCC, there are only 24 suburbs that have a sub 1% vacancy rate. So what does that mean? A sub 1% vacancy rate is generally seen as great, where your property will rent out in under 2 weeks or less from the point it's on market, and you will probably receive plenty of applications for your property. Once you get over 1%, you're waiting that little bit longer, you're competing with a few more properties up for lease, and you start to feel the struggle. That generally stays the case between 1 to, let's say, 2.5%, where you're in this sort of neutral spot where, it's not too crazy, you don't have oversupply. And then you get into suburbs, you get into 3% plus, where suddenly it becomes ridiculously difficult to rent out your property in that suburb. And this is where the challenge starts to get real, right? You've just bought this house in XYZ for $680,000 and it's meant to yield you $500 a week. And so you put an ad up with your property manager for $500 a week. But a week goes by, 2 weeks go by, 3 weeks go by, and you've got no application. What do? You drop the rent. Does that change anything? Maybe not. How much are you dropping the rent by? $10 a week, $20 a week, $50 a week to get someone in the door. This has happened firsthand to me, not in Melbourne, but in Mildura many years ago, before it became what it is today. And I recall this period very clearly in my mind. We had a tenant who was paying $440 a week, circa 2017, and they left. When they left, we put the property back on the market. I was advised by a property manager to put it back up for $400 a week. The property sat vacant for 1 month, for 2 months, and I was starting to get worried. I told that property manager in the 3rd month, let's drop it to where the market is right now so we get 100% certainty of getting a good tenant. And that number, ladies and gentlemen, was $340 a week. So there was $100 a week rental loss, which equated to about $5,000 a year just from needing to be able to put a tenant into the house. That rent never recovered until 2024, right? So that $440 a week, I never saw that back again from 2017 till 2024. So it's something to be mindful of, because once the listings flood the market, it becomes that much harder to find that next tenant, and you're competing against a lot more investors in that same property market. So let's skip to the chase and let's talk about some of the big boys on the hotspots. Wyndham Vale, 6.7% vacancy rate. Yes, markets within markets. There's a new estate, there's an old estate. The old estate hypothetically would have a lower vacancy rate, but what is it? Is it sub 1%? I doubt it. Diggers Rest, 5.2%. Another one to be mindful of. Lots of new houses coming up, some old houses. Struggling to get tenants out there. Craigieburn, a BA investor hotspot, 3.71%. Frankston North, 3.5%. Frankston, 3%. So you're seeing all of these investor hotspots. Pakenham, 3.91%. This is data from October 2025, ladies and gentlemen. We're not far behind there. These investor hotspots have now had a new wave of investors flood in. More investors are buying than owner-occupiers. Therefore, the race to find tenants has become harder and harder and harder, and investors are finding themselves having to drop their asking rents in order to secure a good tenant. So before you dive into the Melbourne market, before you speak with your buyer's agent or your friend or whoever you're speaking with to acquire that property in Melbourne, ask yourself, am I comfortable if this house were to sit vacant for 3 months before I found a tenant? If the answer is no, make sure you are laser focused on the vacancy rates prior to going in to get this house. Other than that, ladies and gentlemen, I wish you luck and the best on your property hunt, and I'll catch you next time. Like, subscribe, and comment. I'm keen to know, what do you think of Melbourne's low vacancy rates?